Rahul Jain, Director Research IT Services, Dolat Capital, joining us. Rahul, what's your take on this transaction? 320 million euros, potential revenue of 1.25 billion euros for over the next 5 years?
Right. So I think this is a pretty strong move. We always know that these businesses are very strong cash generative, and we have also witnessed how the core revenue growth rates have been coming off given the size and challenges in the market. So using of balance sheet to consolidate some of the opportunity and scale the business seems to be the right strategy at this point. So this transaction, which can add upwards of 2.5% growth on a full year basis, apart from the deal win, is a strong testimonial to that kind of a thing, doing a decent sized transaction, which is a needle mover for them. So I think it is a very strong signal that consolidation in the space would continue, as has other players. They did one transaction last year in Social Cloud, and now this is another sizable transaction.
Point taken, Rahul.
Sure.
Yeah, point taken, Rahul. Do you believe that TCS is trying to create opportunities, or trying to widen the net a little bit? Is that really what the intent is? What's the sense like with regard to how the future could hold from a business standpoint, just given this deal? What does it indicate?
See, if you look at the nature of the services that this company is forming, it is more on the auto OEM side. So these are some of the capabilities, at least on the SDV side of it, which are premium services, but the bulk other services look like the capability which TCS very fairly have it today as well. So the capability expansion is a small part of the strategy in my view, but getting a more deeper relationship with the customer is a bigger part of it, and of course the revenue scale up that we get from this such transaction. So those are the bigger motive in my opinion.
Rahul, do you think TCS would be able to leverage some 300 clients that MHP has, aside of Porsche being one of the largest client for MHP? You have the Volkswagen Group, many of the defense and manufacturing companies are also clients of MHP.
Yeah, of course, because what we have seen historically that Indian companies are pretty deep in the English-speaking markets within the European market, but some of the German-speaking or any other non-English market, Indian companies have not been so deep, and these engineering companies, OEM companies, have been relatively more closed in terms of exposure to outsourcing. So doing such transactions are actually widen the canvas within the Europe as a geography and manufacturing and OEM as a space. So that way also it deepens up the opportunity for TCS.
What does this give to Porsche? Does this allow Porsche to focus more on core business and outsource a lot of the back end work to TCS? Is that really the objective? And will more companies be attracted to do that, go down that path given AI? What's your sense?
I think so. The bigger strategy out for a lot of OEM was that they wanted to keep their technology as close within the ecosystem as possible. But that kind of a thought process have been evolving for last several years, and we are seeing more and more, be it the Volkswagen main group or the other subsidiaries, including Porsche. They are now opening up, and they're saying, let's stick to the core and leverage the cost-cutting thing that could happen on the IT side of it. We all know how the volumes are under pressure, how enterprises, OEM are confused in terms of what should be the roadmap in terms of ICE versus EV and stuff like that. So I think the focus is to solve those things and leverage the scaled operation IT efficiency through outsourcing. That looks like the case here.
Uh, Rahul, what's your take on the margins? Because this business has a margin of around double digit. Do you think TCS will be able to bring in more offshore and help improve the margins?
Generally, the movement of job for these kind of companies are not that easy, especially in Europe in year one. But basis the understanding in terms of contracting, year two onwards, I think a meaningful margin leverage can happen. That has been the trend in the past. So, and given the size, given the other opportunity around it, it could be slightly margin dilutive, but given the valuation that they have paid, it would still be earning neutral or accretive. So we don't see any problem from that point of view.
In fact, I was just going to ask you that, Rahul, that is EPS the better way to look at this rather than from a core margin perspective? And ROC accretive too, right? I mean, TCS typically does 40% plus ROC. You're likely to see that to be accretive or not really?
Yeah, I think any M&A on year one may not be ROC accretive because you don't get the best margin, but you pay upfront. But year two, year three, I think it should get aligned with respectful ROC is what our understanding is.
And how are you looking at more deals like this, which open up given this entire transition towards more efficiency, building around AI and that entire technology? You believe that more such deals will start to come through for the likes of TCS? Are these like easy pickings, or do you believe that are these easy opportunities of sorts?
I would not be in situation to say whether it is easy or not, but
okay.
All I can say is that if you look at the amount of transaction or the number of scale transaction that has happened, it started with LTM doing Randstad, then there is a deal by Coforge and Persistent, and now TCS, all of them being in Europe. So I think Europe as a market is what I think most of them are chasing. So we could hear more transaction in that market, and it looks like they are more open than in past, is my understanding.
Rahul, do you see more such things coming in for the Indian IT companies? Because the way, especially in ER&D space, because this acquisition is also in the ER&D space, and with valuations much lower at this point in time because of the kind of slowdown we are seeing in many of the automakers. Do you see more such deals coming in for coming along?
Yeah, that looks like the case. It looks like the buyer, which are the Indian IT companies, which are turning more aggressive towards M&A than any time in the past. And at the same time, from a seller point of view, they are more open to go ahead with this kind of a thing. So it looks like both side of it is amicable. So it looks like more such transaction we might hear as we move forward.
Okay, Rahul, thank you so much for joining us and giving us that perspective.